And it looks like we're live. So, guys, welcome to a different video. I'm on a different computer. I'm trying out using the live streaming service that YouTube offers. I figure it'll probably be easier for me than uploading the videos. I mean, it's not that hard anyway, but it'll probably be easier in general for me, just so I can do it all at once. There's no real presentation involved. It's just, I do it, I switch between screens. It's a lot easier for me to do it from here. So that's what I'm going to try and do. So we'll see how today goes out, and if I like it, I'll probably keep doing it. And if not, then, whatever. Okay, great. So, today was pretty interesting. I am currently in a few plays, so I'm going to try to show that. So it should be on, we should be on screen 2 now. Yeah, so assuming that's working. Yeah, okay, cool. So we should be on screen 2 right now. So these are the plays that we're currently in, and so I'll go over each one, and I kind of discuss how each one of these are going right now, what I'm in each one for, blah, 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 that kind of stuff. So let's get right into it. Now, firstly, what we know from today is that today was a pretty interesting market day overall. Like, let me open up the SPY. So if we change this, and we can see that this is how the SPY is right now. Let me make sure that I'm on our screen. Okay, great. So the way I have this chart set up here, this one allows me to really accurately set levels for the day, for the month, whatever. Firstly, this was around 1 o'clock today. The SPY did a high, and then we started coming down. This happened actually due to news from about Brexit. Boris Johnson was, and mind you, this is actually really interesting because the news came out about 30 minutes after open. It came out around here. Basically, it was talking about how Boris Johnson may start pushing back Brexit if some of his votes don't go his way, and somehow the market had taken that pretty negatively, and so the market came down quite a bit from that. Now, additionally, there were some earnings today, and so that also caused a pretty big reaction in a lot of these. So I'll reiterate, this is a 4-hour chart, this is the 15-minute chart, this is the 1, and this is the 1-hour chart. So these two allow me to see the bigger picture, these two allow me to see the intraday, and so I use those to kind of figure out what's going on with that day. Now, firstly, two things happened today that I think are pretty noteworthy. There's a stock called BIIB, or the ticker is BIIB. The stock is called Biogen. They had earnings today. 2, they had revamped their their Alzheimer's drugs today, and as a result, they went up. Not actually as much as you think. It's only about 40% that they had made today, but they went up over $100 going in, and someone actually ended up, and this was a gap fill. We'd been watching it for actually a very long time. We missed the whole thing actually, and I don't know why. We weren't looking at it. We weren't preparing for it at all, so this is kind of how this went down. Yeah, it's true. It's truly, it's something. The way this kind of shot up, it went up 100 and only stayed up about $60, which is still a ton, especially because it's a stock. Because you're getting 30% out of the stock, but you're getting hundreds of thousands of percents out of this. So from, if I recall correctly, someone had a $500 call option on BIIB. They only had about $550 left, and now they're here. They made about $27,000 if I recall correctly, and so that was really interesting. So we can look over here on this chart right here. Let me make sure that actually accepted it. It did not. Okay, there we go. We can look at it here. So you can see that there's this huge gap fill going on here. So me and my friend, we were looking at this for a while now, and it ended up filling that entirely, and then coming back down. But like I said, the market likes gaps, and yeah, it fills them like really fast. I mean, you can see right here, eventually this thing tanked on this gap right here. Like I said, market doesn't like gaps, so keep an eye out on for those. There are a lot of other stocks that have gaps, like INTC. INTC has this gap fill right here. If it can break above 53.11, 53.25, which it's tested a few times already, then we got quite a bit of upward momentum here. We can move up to 57. Now, mind you, that's not huge, but this is the reason that gap plays have been some of my biggest plays that I've ever taken. I've made it, like I bought Qualcomm for about 15 cents once around, I think it was 40 This was back when it was trying to. There was a different gap. This was some time ago. There was a gap to be filled from around 40. I expected it to go to 47. Blah blah blah. And long story short, it did, and it went really really strongly. So. I mean, I sold that option for about $200 something. So those types of plays are probably my favorite. They don't happen that often, so don't expect them all the time. But when they do, they're pretty great. So today I played Amazon intraday. So let me also make sure that this switched over. I need to make sure these hotkeys are good. All right. So yeah. So right here, for example, Amazon is what I played. So opening up, I anticipated that it's possible that Amazon coming into earnings tomorrow, which Amazon's earning is not tomorrow, it's actually the 24th. So based on how those actually play out, we can actually see that it's possible that what do you call it? That it could have gone up. I mean, especially going into it, we could see that maybe the earnings would play it positively. But as of what we see at this moment, we were going in, it kind of went down. I was in this play. I ended up buying a call around here, played it up till here. I bought it a bit too early, so I bought it here, held it. I figured, I wanted to see how holding these would go. It was actually very interesting. It didn't lose much value. When it came back up here, it made, it was actually quite positive. So if you could figure out where the bottom was going to be, and it was pretty obvious, 1770 is a pretty strong level as far as bottoms go. So you could have bought it here for about $200. I think the option cost about $200. So $2 was about $2.40, and then it went up to about $2.93, almost $3 up here, and then came back down. So that's how it was, and I'm not actually overly surprised, but this is not necessarily something I expected to happen. But all right, let's switch over, and so. Looking into this, this building momentum, I still am liking. So as long as it can kind of hold above these levels, this is obviously a pretty strong rejection point at times. This is one of the SMAs. There's a crossover. Now, some time ago, I was being told about a death cross, and that death cross actually didn't hold at all, which was really funny to me. So now the death cross is undeath crossing. So that's all fun. As for this, I think what I want to do is I want to take probably actually a naked position on this and play Amazon up to about 1850, I want to say. But this isn't going to be this week. This will probably be next week. But I will have to wait and see how that actually starts to play out. For example, in the 1 hour, we see this, we're starting to build some support back. So if it can hold at this level, it'd be pretty easy to see Amazon probably come back here to 1780, maybe even 1800 tomorrow. It's not unheard of. Amazon moves 100 points a day sometimes. So, we have that. This opening tank was pretty bad, and then that brought that, and that actually is another thing I was saying in my previous video. Amazon is quite divergent from the market right now. So that is something to pay attention to as well, this divergence. All right, so we're looking here. So this is Apple, for example. Apple had been coming up for a while now. Apple did come down today, but let's see if this thing switches over. Okay, so Apple did come down today, but not in the same way that Amazon did. Amazon had slipped the entire day. Apple instead had come up and then tanked down at the bottom nearing the end. So that is something that is to be watched there. It did end up not working in necessarily the way that I anticipated, the market as far as I was concerned. But also you have to understand that we have been, if you look at Apple, this is how we've been running for the last few days now, and probably a little bit more. This goes back to the 3rd, so actually a week or so. So we've been running up, 10% over the last 19 days. So, that kind of makes sense. It's logical that it would have happened eventually, that the market's got to pull back. And so if you look at SPY, you can kind of see roughly the same thing. It's a little bit more volatile, and it doesn't last the same amount of time whatsoever, actually. But it is still something. I mean, you get over these 19 days, we are seeing growth, lower percentage. Like I said earlier, October is not known for its insane change. We're expecting a lot of volatility. We're getting that volatility, and that's what I actually really do like to see. Now, enough about the market right now. I want to talk about what I'm in currently, and I'm in a few things. So UAL, a credit call credit. So let me show you guys that. UAL. Let me make sure it shows up. No, it does not. That's fucking annoying. Okay, so I'll probably just switch that side of this. So anytime UAL kind of hit this level, it comes back down. So it was kind of predictable to say, hey, okay, let's take these 90 calls and sell them. Let's sell them as it kind of brings back down to here. They already had earnings, so there's no more unpredictability here. It did not diverge solely from the market, so you can kind of see it right here. So if you look at it, UAL has not been working in tandem necessarily with the market in exactly the same way. Yes, it has been coming up for these last few weeks, same 19 days, came up about 9%. So that's not crazy, but now the intraday has been what's interesting to me, is this morning sell-off and then these lower and lower lows. This is playing quite a bit like Amazon. And because Amazon and UAL are both diverging, I am starting to take more diverging positions in them. But, this is still something to consider because UAL has this top that happened around here. And so if we look at it right here, so UAL has this top right here that it took on, and then it started coming down. So if it holds above this, then that's something I'll be benefiting from. So as long as it keeps breaking down, I don't want it to hold above this. I want it to keep falling. The faster it falls, the more money I make quicker. But that doesn't really matter as long as it expires by Friday. So I am more or less okay on this position. I'm not too concerned about it breaking above 90, but we will have to see how that actually plays out. So that is one of my plays currently. And then the other play that we have going on, we have a McDonald's put credit spread. So McDonald's has been on a down run, so I'll show you guys that as well. So let's go to McDonald's, MCD. Okay, there we go. So McDonald's has been on a down run, or hit a down run after its earnings. So they did really poorly on earnings. There was also some good news regarding Beyond and how they were going to be interpreted by Beyond. So, for example, they were pushing pretty hard for getting some sort of partnership for Beyond. So that was also good for the company Beyond. But if you look at Beyond, we fell all the way down into this gap fill. It was, I think I also spoke about it. We're all the way down to 103, and I spoke about this in a previous video that, hey, there's a gap fill here, easiest fucking play of your life, and it was the easiest play of anybody's life. It came down so fast and so hard. I didn't even expect this, actually, but here we are, and it's down. I am in currently. We were in call spreads, made some money on those, flipped those around, held one of the puts that we also had, made some on that, and then eventually got rid of the whole thing, but that thing went up even more. So Beyond has been working that way, but we're focused on McDonald's right now. So if you look at it, McDonald's had this huge tanker that broke right at this SMA line, and I think that SMA line can probably hold up because it hasn't touched that line ever. So what we ended up doing is we ended up buying a credit spread against the puts. It is down right now, and if you look at the after hours right now, though, we are picking up. It is taking support around that level. So I think that it's possible that we can start going back up. We will have to wait and see. But I do think that I can let this expire out of the money, and I will collect on that as well. So that isn't too bad for me. The BA Condor. So BA has been moving quite volatilely lately, these last few days, especially because there was news about the CEO knowing about what was going to happen, not knowing what was, but knowing about the errors about 2 years ago, or 2016. So 3 years ago they had known, and like I was saying yesterday, this could either be big or not big. And now, right now, there's going to be pressure for the CEO, and turns out there was. The CEO is apparently stepping down, according to the New York Times. So that is very interesting. I do think that this condor will work out. The levels are set for about what was it, like 350 and 335, somewhere around those levels. I don't have the exact numbers in front of me right now, but I'll pull those up, I think, in a different video and cover those plays. These winning plays I'll get into a little bit later, but I think this is pretty good. As for I think that after this huge tank downwards, I shouldn't expect such a big move out of here anyway. So I think that after seeing this, this type of candle patterns are pretty anticipated. We could come back up to here, whatever the case may be. Their earnings is to come as well, so we're gonna see how that goes. Those are, I think, tomorrow. They're tomorrow before market. So based on how tomorrow's morning market goes, we will see what happens. So pray for BA, man. but what I like about that actually is that this news plus this thing could counteract any type of positive news. So if their earnings isn't as bad as what we expected, which is what I was thinking, then this is going to be more of a high IV, higher crush play, and that's what I'm trying to get out of this condor is a high crush. So we'll see how that goes as well. This will be something. Yeah, that's all I can say. I can't really comment on it right now. I think it'll hold within these levels, but there's not really much else to say. So that we'll have to just kind of wait and see. What else is playing? We're playing a CMG, which is Chipotle. We're playing a CMG Condor as well. And so CMG had their earnings today. So I'll show you right now how that went. Not good. So the Condor on CMG holds between 855 was it? Yeah, 855 and 817. And we saw this massive tank down at after hours, and so that is something that, we did not anticipate would happen like this. I did not see it hitting 814. I did not expect that at all. However, I do see it coming back. I do see that this was an overreaction by the market itself, which it has a very high tendency to do. And so as a result, we'll probably start seeing it come back in the morning. And that is what I do like about this. So as long as it falls between about this level right here and this level right here, 255, as long as it can stay between this level for the rest of the week, we'll collect I think $400 of credit on that position. And that is a good bargain, I think, especially because we're only risking about $500 for this play in general. So that's actually a fairly solid move here, the CMG as well. We're also in a Netflix credit spread, and so I'll talk about that right now. Netflix has been coming down for the past however long, and so we had drawn this level, and this level ended up being fairly strong. I think it's holding there. If you look at this 1 hour right now, how it's forming, yeah, obviously it's after hours, so we'll have to wait and see how that holds up. But this massive tank down after their amazing earnings was really kind of incredible. I mean, we saw what, $10 increase, or not $10, I'm sorry. We saw I'll check for sure. I want to get the right numbers. So we saw a increase by 11%. Then we saw the exact 11% just get taken away over the next 2 days, and then more. So now we're down actually from the top of that. We're down 16%. So the condors, or not the condor, I'm sorry, the put sell, as long as it can hold above this level, seems to be pretty reasonable. So that's what we're going for. Anything reasonable, higher probability, higher collateral is something I'm going to be more willing to take as of right now with higher probability plays, because at the end of the day, I can cut out before my collateral ends. I don't need all of these to expire. I'll play them by ear in that regard. I don't have the virtue to test it that way. So that is what I will be doing for the time being. And yeah, so as for tomorrow, what I'm looking for in the market, you can look at this. If we look at the heat map for this week, it was pretty scattered. It was pretty expected in some regard. If you look at some of these indices, if we look at the Dow Jones was down today. Russell and Nasdaq all down. They're all mostly down. So that is what we kind of expected actually after seeing some rally of this nature. I think that as we're starting to move into closer to these earnings, I think we're going to start seeing a lot more bullish behavior. This is obviously a rejection from the 300, and that's not unexpected. 300 is a very powerful level, and it is something to be wary of. But being overly concerned, I think, for this is not too much of an issue. I think it's pretty solid. The moves are solid, and I think this rally will work out pretty well in our favor. So, yeah. So that's my opinion of it this far. Yeah. So, like I said, we're looking into the rally. I think there is one important thing that I do want to look at. So, let me open up the Fed rate cut. Let me open up the Fed rate monitoring tool. So if you look at it here, you can see that right now the market is pricing in, the futures specifically are pricing in a 94% chance of a rate cut. So this is all very interesting. I think what this means, I honestly don't know right now. I don't know why the markets are pricing it in this way. There are quite a few possible reasons as to why this is happening, but the biggest one I could consider is possibly that, you know, the indices are fine, they're artificially fine, but the longer term out of this is more problematic. They don't know if over the long term, or is the market okay? Because some of the PMIs are contracting. We have different reports that are reporting, different reports that are saying that, you know, we're not going to get the same level of growth anymore. Perhaps even a contraction is what we're anticipating. That is what I think is most likely preparing this rate cut. We have not worked out the currency deals at all. We have not worked out quite a few different things. So based on that information, and we haven't worked out the trade deal, so nothing has been worked out. Everything is focused on the earnings right now, and so as a result, you know, we're getting these types of things. So there is that, and then if you look up CNBC bonds, this is also extremely interesting that I like. Right here, everyone is freaking out about the inversion. We're not even close to it right now. So you can look at it. You can see that at the time they had inverted around 1.5 back in August. Now they're not even close. They're about 2 points away, and so that, or 0.2%, they are 0.2 points away. So what that means right now is we are in a less I can't say volatile, because the way that everything is being taken is kind of hard to say right now, especially because of some of the behavior that the market is up to for every now and then. For example, the reaction to Brexit, these sorts of things, you have to kind of consider what each one means. And I think that I don't think this will hold, and I don't even think this is actually the concern right now, because if you actually look at, for example, the TLT, you can see that we're coming down. So the value of the bonds are coming down in this earnings market. So this might actually just be something that happens as a result of the earnings market. But whatever the case may be, I think that this is all very important to watch, and it's important to keep an eye on. So keep watching these is definitely what I'm going to be doing. I'm going to be keeping an eye on the bond rates. I will not stop doing that, especially with the yuan, how the yuan reacts to stuff like that. But yeah, I think for now those are what are key components, key points that matter, things of that nature. So yeah, I think that's all I have to say for now. This was an interesting trial going on live stream. I think I'll probably do this again. It was pretty fun actually. So yeah, see you guys next time.